Joining us now with more on today's accelerating tech sell-off is Sylvia Jablonski, Defiance ETFs CEO and CIO. Sylvia, it's good to see you. So I'm just looking here at the XLK. We are deep in the red today. We're down about now 10%, Sylvia, so far year to date. You're, I'm sure, getting questions from your clients about this sell-off in tech. What are you telling them, Sylvia?
Oh gosh, it feels like 2022 again, doesn't it? I think what I've been telling my clients is actually that this certainly isn't pleasant, right? And tariffs came before tax cuts, and a lot of the tailwinds that we hoped would propel the market into first quarter, I think are going to kind of be put off, and we're starting with the hard stuff first. And there's a lot of uncertainty around tariffs, but putting everything to the side, I don't think that we're in a recession or headed into a recession anytime soon. You look at the jobs numbers were pretty good. Consumer sentiment has weakened, but that doesn't mean, because the consumer is upset, doesn't mean that it necessarily shows up in the data right away. That takes some, time to kind of pick up those decays and whatnot. And, Julie mentioned earlier, you had Mr. Krinsky coming out, we're starting to breach some technical levels here. And you have to think that there's a tactical bounce, in our near future here, if not even, if not next week or tomorrow, I would assume soon. So what I tell investors is long-term view, focus, buy on the dip.
It is interesting, Sylvia. I want to zero in on big cap tech in particular. I'm just looking at a note that the JP Morgan equity strategy team put out today as well. And I guess they've said this before, but they're saying it again. They think that growth, US tech, and Mag 7 are all unlikely to work this year. So even if there's a short-term bounce, they're still not expecting those stocks to deliver. That sort of growth has now seen its day for the moment. Do you think there's any validity to that?
Well, I think that a lot of those names have actually pulled back a good amount. You're talking about, Tesla earlier. You're talking about 800 billion of market cap coming off. They lost all of their post-election gains. And NVIDIA is another one, right? I don't think AI is going anywhere. The CapEx spending hasn't slowed. If we listen to all of the different, earnings calls and things out there, of course, this market, it doesn't feel good. And so, you usually have investors going and selling those stocks first and kind of taking some, money off the table. But I think that a lot of those names have fallen enough where actually, again, if speaking as a longer term investor, if I dollar cost average, when am I going to do that? I mean, this is kind of the perfect time to do it when stocks are really selling off. That's not to say that there aren't other opportunities in the market, though, right? I think broader diversification, just having some, exposure to something other than Mag 7, like the X Mag, the 493, other stocks out there makes a lot of sense. But you can also nibble at some of these names like Broadcom. I mean, you have some NVIDIA, Broadcom, you have some excellent AI names that are on sale right now, if you ask me.
I mean, look, I'm just looking at NVIDIA here. We're now down to 20% just in 2025 already here. I'm just curious, do you think, though, broad strokes, so would you expect just the broad pressure to continue until we get more clarity on this trade war?
I would agree with that statement. I think that there's going to be some broad pressure on the market, and particularly broad pressure on the Mag 7 stocks, but the other good side of that is that some of these earnings expectations have come down. There's been a little bit of a reset here with Mag 7, right? They've fallen off of their kind of like perfect pedestal and do no wrong on earnings announcements. And I think what happens with that is that investors then reset expectations, and they're kind of more willing to go into those names actually. And I think AI and quantum computing are the two biggest innovations in the next 5 to 10 years. And when you have these stocks falling off 20, 30, some of them 40%, I do think you're going to have investors buying on the dip there. And again, not to say that they're not going to protect their portfolio, hold some cash, diversify into some staples and defensive types of names. But I do think that the dip buyers will come in eventually. And I wouldn't be surprised if it happened in the next day or two. Yes, maybe we'll have more pain, but we can't call that bottom. We always say that. We can never call that bottom.
No, it's a difficult thing to do, Sylvia. At the same time, you're not the first person to come on today and say, take a deep breath here. If you're a long-term investor, you should not be panicking in these markets. But I would ask what you are most worried about, where you do think the biggest risk resides here for this market.
So yeah, that's a great question. I do think that undoubtedly there is risk with these tariffs, right? So it's going to take time to see how that actually impacts the economy. Geopolitics is another one. Some of these situations that we have going on, whether it's Russia, Ukraine, or even the future of the Middle East, we don't know how that's going to play out into markets. But I think in the shorter term, the biggest risk for me is just tariffs and where we land with that. The market does not like that uncertainty. The upside of that, though, is that the thesis here is that all of these, jobs in manufacturing are going to come back into the U.S. and that's going to help real wages. That's going to increase jobs. That's going to, increase GDP and things like this. But all of that takes time. So we just have to see kind of like what the timing is on all of the data and all of these things kind of happening at once. I do think we need a Trump put or a Fed put or a tax cut. The market needs something positive, and I don't even think it's going to be inflation being directionally good anymore. I think it's bigger than that. So it's waiting for positive sentiment, and that's the tough thing to wait for.
Yes, especially since we have no idea if that's coming or not. Sylvia, thanks a lot. Appreciate it.
Thanks, Julie.